Okay, so we are going to continue with our 2018 question paper, where we'll be starting with question 3, which is part of bank reconciliation unit in fundamentals of accounting. So why do we draw up a bank reconciliation? Why do we need a bank reconciliation? A bank reconciliation is prepared in cases where your cash book and your bank statement are not corresponding or they are not matching. We say that if the amount that you record in your cash book, that after you recorded everything, all transactions in your cash book, in your bank balance, in your bank column. So when you balance off your cash book, the balance carried down or the balance brought down that you get in your cash book should be the same as the balance on your bank statement, because it's the same account. You understand? So in cases where those two amounts are different, meaning the amount that you got in your cash book is totally different from the amount that is on the bank statement. Remember, the bank statement is given to you by the bank each and every month end. Ne? So if those two amounts are different, then you will need to reconcile your cash book and your bank statement. Now, to reconcile, you will have to draw up an updated cash book as well as your bank reconciliation statement. Okay, so in the previous session, when I introduced the topic, I said that when the debit side of your cash book is the same as your credit side of your bank statement. That's why when you receive money, when money is deposited into your account, the notification that you get says your account has been credited, ne? Meaning the bank statement increases on the credit side. That's why the debit side of your cash book should be the same as the credit side of your bank statement. And the credit side of your cash book should be the same as the debit side of your bank statement. That's why when money is deducted from your account, né, the notification you get says an amount of what has been debited from your account. Né? Your account has been debited by 500. That simply means that 500 was deducted from your account. So when it comes to the bank statement, it decreases on the debit side. So that's the first thing that you need to know. Okay, and I also said that all the amounts on the cash book, ne? Now after finding out, listing down all the amounts that are totally different or that are missing, let me say you have your cash book, all the amounts that are appearing in your cash book, but they are not appearing in your bank statement, should be recorded in your bank reconciliation. And all amounts that are appearing on your bank statement but they are not appearing in your cash book should be added back to the cash book using the updated cash book. So you will need to update the cash book. Okay, and then I also say that all the amounts on the debit side of a cash book that are not appearing on the bank statement are called outstanding deposits. All amounts on the debit side of your cash book that are not appearing on your bank statement are called outstanding deposits. And all amounts on the credit side of your cash book that are not appearing on the debit side of your bank statement are called unpresented checks. Meaning all amounts that are on the credit side of your cash book but they are not on the debit side of your bank statement are called outstanding deposits. So I also say that sometimes in the examination you can be given a cash book and a bank statement like this, which is very easy, or sometimes you can just be given transactions. Then you are the one to decide whether this transaction will go in the bank reconciliation statement or it will go in the updated cash book. Okay, so we are going to answer the question 3. I hope we can all see on the screen. 3.1. Okay, so 3.1 says You are given the follow. You are given the cash book and bank statement above of Muharwa Guest House. Update Muharwa's Guest House cash book using information above. So you write the heading. Don't forget to always write the heading first. So the heading will be updated cash book of Muharwa Guest House for the month ended and this month ended on the 30th of June 2017. 30th of June 2017. Okay. Now that that is the first thing. Every book that you read, every book that you draw up in accounting should have a heading, and that's the heading of the updated cash book. So we are going to draw up quickly our cash book, and remember, a cash book is a ledger account of your cash and bank, but in this case we'll only record the bank and not cash because we are dealing with bank reconciliations. So we have the date. Okay, there are 6 columns. Okay, so this is the date. Okay, date, bank, okay. Now this side of the cash book is the debit side, ne? So this side, this whole side is the debit side, and then we have the credit side of a cash book, ne? We said that the debit side of a cash book is the receiving side. So all money you receive should be recorded on the debit side, and all payments, money paid out from the business, is recorded on the credit side. So the credit side of a cash book is the payment side. So whenever money goes out of the business, you record it on the credit side, and whenever you receive money, you record it on the debit side. Okay, so after that, after drawing up our cash book, now we need to record the balance. Remember, we are trying to update our balance carried down because our balance carried down is wrong. It does not include some of the information, ne? So we need that. This is the balance carried down. If you check on the question, the balance carried down, the one that is on the 30, the 1,591 is the one that we need to update, ne? We need to update and get the correct balance carried down, ne? Now when you're updating, we do not record it as a balance carried down, but we will need to bring it forward, ne? And we said that for every balance carried down, there should be a balance brought down on the opposite side, ne? On the opposite side. So because our balance carried down is on the credit side, our balance brought down should be on the debit side. And because this is an updated cash book, meaning that your balance brought down will not be on the first day, but it will still be on the 30th of June, because that's when you update your cash book on the last day of the month after receiving your bank statement. So your balance brought down, in this case, we said that balance brought down is always on the first day of the month, but in this case, because we are updating a cash book that already exists, we are just trying to get the correct amount, a correct balance of our cash book. That's why our balance will be on the 30th. So you will have 2017. You always start with the year first, and then the month, June the 30th. Okay, and then from there, don't forget to write the all Then from there, it will be the balance
brought down.
brought down. And then you record the amount. Ne? So you record the amount, which is 1,591. That is the balance you are trying to reconcile. 1,591. Okay, now once you're done, after recording your balance brought down, you will have to add back all the amounts. You will have to record all the amounts that are missing in your cash book, meaning all the amounts that are on your bank statement but they are not in your cash book. And by all the amounts, we do not include the balances, ne? So the balance column that you see on your bank statement is not included. It's only the debit and credit. Okay, so let's check. Let's compare our let's compare the debit side of our cash book and the debit side of and the credit side of our bank statement. Looking on the debit side, we have a $62 in our cash book, and we also have a $62 on our credit side of our bank statement. So that one is fine. We also have a 75 in the cash book and 75 in the bank statement, so it's fine. And then we move on. We also have a 224 in the bank statement and also in the cash book, so it's fine. And then you go on in, if you check in your bank statement, remember we are updating our cash book. We have a 64 in the bank statement, which is not in the cash book. So in that case, we'll need to record it in the cash book because it is not appearing on the cash book. And what what account is that? Is that traders credit. Yeah? So the details on the debit side, remember the date is just the 30th. Yeah? So the date is just the 30th in all, on all the sides and on in all the transactions, because this book you are preparing it on the last day of the month. You are just trying to update it to make sure you have the correct amount. Okay, so you record the transaction, which is F line flying traders credit of how much? Of $64. Okay, and then you check. Do you have any other amount on the credit side of your bank statement that is not appearing on the debit side of your cash book? No, that 64 is the only amount. After that, you compare the debit side of your bank statement with the credit side of your cash book. So let's compare. We have 2017 June the 30th. So let's try to compare. Now, looking on the credit side of our cash book and debit side of our bank statement, we have 180 on both sides, so it's fine. We have 519 on both sides, so it's fine. We have $41 on both sides, so it's fine. And then we have $52 and $43 that are appearing in our bank statement, but they are not in our cash book, and that we'll need to record them on our cash book. So on the credit side, you will have the SLM standing order, SLM standing order of how much? Of $52. And then we also have the bank charges, ne? We also have the bank charges of $43. Okay, now you go back to your two statements. Do we have any other transaction that is appearing on the debit side of your bank, of your bank statement, but not appearing on the credit side of your cash book? No, we do not have. That means those are the only transactions that were supposed to be recorded in our cash book. And so, because we are done recording all the transactions, what we'll need to do is we will need to balance off our cash book. we'll need to balance off our cash book and get the correct balance carried down that we are looking for. Okay. So we have on the, you can see that the debit side is the biggest side. So you have to add your debit side. So 1,591
plus 64.
Just hold on, my calculator is, I don't know what's happening. Okay. What is 1,591? Can somebody please give me that the answer of that? 1,591 plus 64. How much are you guys getting?
Ma'am, andrimo class ira. Ire ke ba andrimo class?
Anyone please with the calculator, because I don't know what's happening to mine.
1,655.
1,655. So 1,655, ne? So because the debit side is the bigger side, so you record the amount on both sides, 1,655, and then from there you find the difference on the smaller side, meaning you subtract your smaller side from this amount that from your balancing figure. So 1,655 minus 43 minus 52 will give you your balance carried down that we are looking for. So how much is our balance carried down? So how much is our carried down?
It will give us 1,560.
1,560. 1,560. So that is the amount that we are looking for. And we said that for every balance carried down, there should be a balance brought down on the opposite side. Okay, so you are 2017. When is the next day? The next day will be on the 1st of July, because we are no more updating it. We are done updating now, because this is our correct figure that you are looking for. We'll need to bring it down to the next month. We'll need to bring it down to the next month, which is July the 1st. So it will July the 1st, balance brought down of 1,560. Okay, so are there any questions before we move on to the bank reconciliation? Two minutes, please. Questions?
Okay. Can you lift it up a bit to the balances there? I want to ask something.
Okay.
And now, after deducting 1,655, the balance we got here, why why should we now write 1,560 between 43 and 1,655? It came last, but then it should be in the middle.
Okay. Remember, we are balancing, ne? When we balance of accounts, we want all the sides to be equal. That's what balancing is.
Oh,
All
yeah.
the sides should be equal. So in this case, one side is big and one side is small. You understand? So you first have to add up all the sides, and then you check, okay, now looking at these two sides, the debit and the credit, which side has the bigger amount? Okay, so in this case is the debit side. So you will have to write the bigger amount on both sides. You understand?
Okay.
And then from there, you find the balancing figure, or you subtract the smaller amount from the bigger side, or you subtract the smaller side from the bigger side. Now in this case, it's 1,655 minus 43 minus 52, and then you write your balance carried down, which is 1,000. So the balancing figure is the missing figure is 1,560. So meaning that if you are to add your sides, they will both give you 1,500 as 1,655.
Okay. I got it now.
Okay. So it's very important that you learn how to balance, like that you know how to balance, accounts in accounting, because we do that often. Even when you're drawing up your income statements, in most cases, in most questions, you'll be required to draw up a ledger account. Any other questions? So everything is clear?
Yes, ma'am.
Okay. Okay. And then from there, now that we are done with A, we move on to B, or to 3.2, which is our bank reconciliation statement. So 3.2, the heading will be bank reconciliation. Of the name of the business, Moharwa Guest House, as on the 30th of June 2017. Okay, so there's a straightforward formula that I love using, and I always find it very much easy. Straightforward formula that I find it very much easy when it comes to a bank reconciliation, which is balance as per bank statement, add outstanding deposits, less unpresented checks, and then you get your balance as per cash book. Okay, so this is a straightforward formula of your bank reconciliation. So there are actually two formulas, but I prefer this one because it's very easy and straightforward. You know, it's very easy. So you take your balances per bank statement, and then you add all your outstanding deposits, and then you subtract all your unpresented checks, and then you get your balance as per cash book, which will be the same as the 1,560. So if you do not get 1,560, then just know that somewhere you made a mistake. So if you do not get same amount, then you know, okay, if there's no mistake in the question, where if you will always be told in the exam if there's a mistake somewhere in the question. So if you're not told, then you do not get the same amount, and just know that you made a mistake somewhere. Okay, so let's start off with our balance as per bank statement. So what is our balance of our bank statement, our closing balance? So we go back to our bank statement, then we look at our balances. The last amount on your balance column, the last amount is your balance as per bank statement. So the last amount is 1,000. That is the last amount. Okay. So we record 1,000, and then it says add outstanding deposits. And what did I say? Which ones are outstanding deposits? Who still remembers? Which ones are outstanding deposits? Which amount?
Outstanding deposits.
Huh? Who wants to give it a try? Which amounts are our outstanding deposits?
The deposit, the amount in the cash book that is not appearing in the bank statement.
Now on which side? The amount on which side?
On the debit side.
On the debit side. Now looking at our cash book, which amount is on the debit side that is not appearing on the credit side of your bank statement? We only have one amount, which is from B. Becker, meaning that amount of 582 is not appearing on our bank statement. So in that case, that's our outstanding deposit. So our outstanding deposits are 582. Okay. And then from there, we list our unpresented checks. So we said unpresented checks are amounts that are appearing on your credit side of your cash book, but not on the debit side of your bank statement. So in this case, we have 41 is appearing. So in this case, you actually have 22, ne? We actually have 22 from D-Risco, meaning that the 22 is it's a check that is not yet present. So you gave Risco a check, but because Risco still did not go to the bank and present that check or withdraw or cash out that check, the bank will not know whether you gave Risco a check. That's why it's still not presented. You gave out a check, and therefore you recorded on your cash book that your bank account has decreased. But because Risco never went to the bank and cash out the check, the bank does not know of what happened, and that's why it's not appearing on the bank statement. And that's why it's called an unpresented check. It's not yet presented to the bank. Do you understand? So you less your unpresented checks. So how much are we getting? How much will we get? So 1,000 plus 582 minus 22, how much will you get?
1,560.
1,560, and that is the same amount that we got in our cash book, meaning we are correct. Do we understand?
So it's that simple.
It's very simple. And to be honest, bank reconciliation is the most easiest topic in accounting, I would say. All topics are easy, but this is the easiest because
Okay.
it's straightforward.
Mm.
So do we all understand? Any questions? Are there any questions?
Sarafina, I'm lost. Where's the 22 coming from?
Check on your, we said the unpresented checks are amounts that are on the credit side of a cash book, but they are not appearing on our bank statement. So if you look on the 29th, there is D-Risco. We gave a check of 22 to D-Risco, and the 22 is not appearing on the debit side of our bank statement.
Oh, okay.
Yeah.
Okay.
Right. But not okay. Amounts appearing on the debit side of the cash book, but not appearing on the credit side of the bank reconciliation. Unknown. These are outstanding deposits. And then amounts on the credit side are not appearing on the debit side. They're known as unpresented checks. Okay, so with this format where you are given a cash book already and a bank statement, what you need to know is only that which sides do you compare, and which amounts are known as the outstanding deposits and which amounts are known as the unpresented checks. So if you know all these statements that I wrote here, and you're able to identify the amount and so, then believe me, you will get full marks. So are there any questions? Oh. Any questions? Okay. Now that we do not have other questions, so we'll move on to question 4. Okay. So we'll move on to question 4, which is the NGOs, non-governmental organizations. That the chapter of non-governmental organizations. That is question 4, where you are asked to draw up a subscription account, an income and expenditure account. But looking at our time, we only have 2 minutes left. So once I'll just quickly end the meeting. End the meeting and then reopen it. So we start off with our question 4. Then we can complete our question 4 tomorrow, and then finish with the question 5 as well. Question 5 is on incomplete records. So question 4 is on non-governmental organizations, and question 5 is the incomplete records. Now looking at this question paper covered almost, I think, 80% of 90% of your course outline. So it's very important that you are familiar with all the topics that are on your course outline. It's very important that you are familiar with all the topics that are on your course outline, because this question paper covered almost the whole course outline. I think the only part that the question paper did not cover is the theory part, which is the 2 objectives on the course outline, which is a presentation of financial statements, as well as current accounts and current liabilities. And yeah, chapter 1 and chapter 2 in your study guide, those are theory chapters. Okay, now that there are no questions, we only have a minute left. I'll quickly just end the session and reopen it again. Then you guys can join, so we continue with question 4.